More bad news ahead for the troubled Spanish economy. Spain's fourth largest bank, Bankia, has suspended trading of its shares. Sky News has a story.
Shares in the Spanish bank Bankia have been suspended as it plans to request more state aid. The lender's still weighed down by losses from the property market crash in 2008 and needs the extra money to restructure.
Bankia was partly nationalized 2 weeks earlier when Spain's government bought 45% of its shares. Fox News reports the government announced an $11 billion bailout to rescue the debt-stricken bank, but insiders say after the board meeting, Bankia might be asking for more. Spanish newspapers quoted unnamed market sources as saying the bank will likely ask for up to $19 billion at a press conference on Saturday. Neither the bank nor the economy ministry would comment on the reports. Spain's government has already invested around 4.5 billion euros into Bankia. The $19 billion question is if Spain has the funds to cover this without resorting to foreign aid.
Now, they've already come up with, I believe, around $5 billion US for this bank. The tab, as Paul was saying, could go as high as around 20 billion US, and they're going to have to go to the debt markets, which sounds like a terrible idea right now.
Spain's citizens are not thrilled by the news. Severe economic recession and an unemployment rate of nearly 25% have already sparked anti-government protests. Euronews reports that a state-funded bank bailout will only increase resentment from the people, pushed to their limits by austerity measures.
More money for failed banks is bound to anger austerity-numbed Spaniards who protest on an almost daily basis outside financial institutions and government offices.
But optimists continue to hope Spain's financial troubles are on the mend. University of Granada professor Santiago Carbo Valverde tells the BBC Bankia's woes are the worst of the storm. Spain's other major banks are in a more secure position.
The three largest ones, I think, are in better shape because they have lower exposure to the real estate market and to the bad loans in Spain, and they are more internationally diversified.
Bankia was formed in 2010 from the merger of 7 struggling banks. Its assets are estimated at 32 billion euros. For Newsy, I'm Neville Miller. Multiple sources, the real story.